Hello friends. I'm getting lot many questions from the investors and the members that what is going to happen in next few months about the market, whether the market is going to touch 20,000 and eventually it will touch 21,000 or not. That is what everyone is asking. So today's video is specifically we are going to dedicate now what is the current situation in the market, how the valuation look like, and how I think that what is going to happen in market in next few months. So stay tuned, stay till the end because lot of information is coming on your side. So guys, welcome everyone. My name is Tapan Doshi. I welcome you to my YouTube channel and let us go and understand about market first. What is the current situation and how the valuation look like and the future course of action. So guys, as you can see, market has touched all-time high. Now, main thing is let us understand first what are the reasons why the market has touched all-time high. So going one step by step, let us take the first point. Talking about the first point, as I told you, market is all-time high. Now the main thing is what are the various reasons? What are the reasons which has led to market such a all-time high? Now talking about various reasons. Reason number one is nothing but strong macroeconomics. If you talk about strong macroeconomics, now currently we have a healthy GDP growth rate of 7.2 in financial 23. Again, guys, these all the points I have taken from Motilal Oswal research report. Now, basically, I was gone through that research report. That is very good, and it is giving an outlook of what is going to happen in market in next few months. So that is what I have taken there. So if you talk about strong macros, currently we have a healthy GDP growth of 7.2 in 2023, picking out of inflation and interest rate, robust external balance and stable currency. You know that inflation is almost peaked out across the world, and that is very good point because at the end, if the inflation is getting out down, correct, and that gives a boost to the economy also, and also slowly and gradually, no, the all the you can say that countries will start reducing the interest rate also slowly and gradually, and that will add to the economy because at the end of the day you need lower interest, to boost their economy. So of course interest rate is going to come down. That is one of the biggest positive, and our external balance, even the dollar, USD, INR currency is also quite stable. Talking about second point is nothing but the stable micros also. We talking about earlier macros, talking about micros. Recent financial year 23 corporate earning on high base. Of course, the last year, whatever corporate earning was there was quite good overall. Again, expectation of teen growth in financial 24 and correction in commodity prices. You know that oil prices is slowly and gradually coming down. It's already at a 72 level now, which is good for an Indian economy. Anything about 85 is always going to hurt Indian economy. And any time if the dollar, sorry, the crude oil goes to below $60, that is also not good for Indian economy. 70, between 70 75 is always good. So currently it is there only. Again, there is a quite a sharp recovery in FII flow. If you talk about now from last 3 months, you can see there is a very good FII flow, which is also helping Indian economy a lot. We are going to talk about how the FII flow was, what was the level of value the FI flow was in last 3 months in detail in next few other points. So that is these are the three main reasons which has led to basically recovery in last 18 months after last 18 months of consolidation. Now let us talk about, no, is the current market too expensive? Now this is the main question to ask because is the valuation is too expensive? We have to go and check it out, the valuation also. Now talking about that only, if you talk first point is nothing but the valuation today are relatively more reasonable than October 21 peak of Nifty. You remember when there was a March 2020, when there was a COVID crisis, at that time we gone up to almost 7,600 level Nifty. Then again we gone up to quite a high. Again there was a geopolitical crisis. Again we gone up. So yes, overall if you see in October 21 peak, now currently our valuation is much better, and this is largely it will be 18 months correction. What the correction happened in Nifty. Again, however, when the correction happened in the Nifty, if you see the earnings were up by 30 to 44% in 22 and 11% by financial 23. So as I told you that even though market has fallen, the earning has not fallen so much. And earning has shown a very good recovery. And that is the one of the reason of valuation is much more reasonable compared to October 21 peak of Nifty. Again, second point, the recent rally in NSE mid cap index is almost up 19% in last 3 months. Now that means that Nifty, sorry, NSE mid cap has increased by 19%, which is quite a strong comeback. That shows that confidence is getting back into mid cap and small cap. Again, the index, basically I'm talking about Nifty here. The index has compounded more than 12% over the last 6 years. So if you take the CAGR of last 6 years of Nifty, no, the average return is around 12% only, which is quite less compared to the average. If you take last 40 years, is around 15%, 14 to 15%. So it is very less compared to that. So yes, it is a modest return. Again, the NSE small cap during the same period has compounded at 7%. Okay, only CAGR. So that means 7% in last 6 years, but however, in last 3 months, it was 20%. In last 3 months, when we touch our all-time high, yes, there was a quite a pullback in the Nifty level. But overall, if you can see that overall it is 7% only, which is okay types, not a great one. Again, fifth point, despite the rebound from the March 23 low, India is underperforming the global market. Now, this is very important to understand. See, Nifty is up by 7%. However, from March 23 lows, last 3 months I'm talking about. However, if you talk about globally, Nasdaq at 32%, S&P 16%, Germany 18%, France 17%, okay, Japan 15%, and South Korea 10% in USD terms. So all these countries has performed much better than us in last 3 months. So ऐसा नहीं कि हम लोग अकेले भाग रहे. The whole world is running, and overall, if you see recovery, we are doing less compared to other countries also. That point you have to keep in mind. Again, the primary markets have seen limited issuance and nowhere resemblance of the euphoria in current year 21. Now, if you talk about in 2021, no, the way the IPO were coming, the big IPOs coming, the way they were minting the money, that euphoria is not you are able to see now. So that's a good part that the primary market is not so much overcrowded as it was there in current year 2021. Again, secondary market is nothing our stock market. Now, if you can see last 3 months, there were lot many block deals happened. So many companies and promoters came of 5,000, 7,000 crore rupees of block deal, and they were easily able to sell that. Okay, it means basically the market was easily able to grasp that block deals also without any big no without big fluctuation happening at a market level. So that shows that lot of liquidity is already there in the market. Again, Nifty is currently trading at 12-month P ratio of 19.2%, which is currently at a 5% discount rate over the long-term period. Now, this is very, very important to understand, guys. We are all, even at 19.2, we are at a 5% discount on long-term period average. Now, this is as this shows that yes, big exuberance is not there in the market. It is not that the market is overheated, and that is why it gives me a confidence that yes, we are going to hit 20,000 and 20,000, 21,000 very fast in next few months also, because the way the market is behaving, the way the bullishness is there. So yes, maybe 20,000, maybe in next 1 or 2 months, 21,000 may take few months or 1 year, but yes, we are going to touch that easily. And thus the valuation is far more actually no reasonable compared to the October 21. Again, when we talk about the relative valuation, of course, we are still at a premium at the MICI level, MICL emerging market level, we are still at a premium level. But then also, why we are at a premium level? Understand one thing, that we are able to give them a growth. See, the fund will flow only to the countries where there is a good growth, and overall macro micro combinations are very good. So it's showing a better earning visibility. So this is how what I can see about the valuation part. Valuation part also, I take Nifty is not at a exuberance level. Still, the lot of scope of there to go up here. Again, now let us see the FI flow. Now, FI flow is one of the indicator now which is actually taking market up. So you know that there was almost USD 26.1 billion between October 21 to Feb 23. Between this period there was a big outflow of almost more than 2 lakh crore rupees. Okay, however, FII bounced back very well in last 3 months. And cumulative inflow is almost 15.5 billion. Now, taking about that flow only, this shows that yes, now the FII is getting confidence at India level also, and they are coming back strongly. And as I told you, FII will go to a country where they can see the growth. And this is where at India level, no, FII can see a very good growth. Again, if you talk about DII also, no, DII flow also continued remain positive at 4.1 billion during the same period. So DII also giving you a very good growth, very good inflow also of 4.1 billion during last 3 months also. And if you talk about YT3, current year 23 YTD, the FI inflow stand at 11.8 billion 11.8 billion, whereas DI and net buyer were inflow with 10.3 billion. So cumulative, they've invested more than 2 lakh crore rupees in current year 23. So in last 1 year also, they have a very, very good inflow. Again, India's based on strong economy in context of weak global flows. Okay, again, the basically the earning going to come very good from here. Again, the China is actually falling apart, not falling apart, but yes, China is not able to grow the way it used to grow earlier. So that is also giving a very good push to India, because see, understand, if the China is growing, the fund flow may be there towards China much more. But if the China is slowing, the fund flow may come to India, and that is what you have to understand. So again, as I told you, no, because of the China issue also, we are getting much more fund flow. Now let us talk about the future prospects. Talking about the future prospects, first let us talk about the overall earning growth. Where the sector, which are the sector we going to lead. Now, if you talk about the earning growth, I think once again domestic cyclical such as BFSI and auto will do well. BFSI is nothing, the banking and financial services, they will do well. Again, the auto will also do well, because see, if the interest rate comes down, auto industry will be given a very big push. So yes, auto will also do well, because auto demand will go up, and all the finance company, which are related to financing these autos and everything, the chances are very good that they will also do well. Again, consumer IT are going to have a slow and steady growth rate. IT consumer, FMCG anyways, it's a evergreen market, evergreen sector also. But however, talking about IT, because of the earlier bank crisis in US, and the way the US recession fear was there, the IT is almost down. But another big, you can say that threat has come towards AI, artificial intelligence. So वहां से भी एक बड़ा threat है. So yes, let us see how they are going to cope up. But yes, they will show a healthy growth over a time, because they have already fallen a lot. Again, metal and cement are anticipated to break the aggregate. So metal and cement may not be so great compared to all other sectors. Now let us understand now, in this market, whether you should follow growth or you should follow value. Now this is important to understand, because when the market is growing, growth stocks will always do well. So talking about that only, if you see after the period of current year 21-22, okay, almost last 2 years, okay, growth as a theme has given a comeback, value is relative back burner. Because see, when the market is down, at that time people will actually go for value. But when the market is coming up, no, it is coming up strongly, people investment will always go, and like domestic institution, FII, or even a local investor will always feel to go in a stock where their growth is much more. And that is where no, growth stocks will always do better compared to the value stock. Also, the current market context is clearly precedence to growth and earnings recovery things. So growth, and wherever the recovery thing is coming to come good, that is where the company will perform well. The interest rate is going to stabilize. Again, actually it is coming down from the upper side, and now the interest rate may go down. That RBI already told that if it is going to go below 4%, currently the inflation is around 4.2% at India level. If it goes below 4%, the RBI may think of reducing the interest rate also. So that is what it is giving an chance of an alpha creation in lot many stocks, provided if the growth is there. Also, in every recovery cycle, valuation always looks expensive because while direction of recovery is self-evident, the quantum of recovery may surprise. So initially you may feel that growth stocks may be on a higher valuation, but understand if the growth stock is giving you the consistent return, then the PE actually will expand. And once the PE will start expanding, no, and the growth prospects are good, except premium the market will give to that stock and the price will go up. So a growth stock may surprise you on the positive side whenever there is a bullish market. Also, as the rate peaks and the narrative of 24, that is rate cuts start coming in, no, the growth will dominate the value. So as I told you, as the uh, RBI and all that, they start reducing the rates, and all the rate sensitive stocks and also the stocks which are giving us a very good growth, they will perform very well, because this is where the market will give them an extra premium, and there'll be a, what you can say, that extra push from all the retail and FI investor towards going to that stock only. And valuation will also re-rate, okay, re-rating of the stock and all that happens. So my suggestion is that when you are there in this scenario, in the current scenario, we should go for a growth stock and not for the value stock. Growth stock will give you much better return. Value stock, normally when the market is falling, at that time people go to the value stock, because if there is a bounce back coming from the value stock, then it will be fast. But the value stock are not going fast as at the growth stock. Okay. Again, guys, if you really want to understand all these things in much more in detail, no, there is a workshop which I am conducting every time. No, you can just see the link below and you can click it, and where we are going to talk about value and growth investing much more in detail. So you can attend that session, and you will get lots and lots of value out of that, because I am going normally give a 21 golden rules in that session. And also, guys, just think, just type in the chat box now, what do you think about this market? And also know whether you are following value growth stocks or not. Are you investing in value stock, growth stocks, and or which stocks you're currently investing in? Now, let us take the last point. Last point is nothing but, no, what are the important points you have to keep in mind for the next 3 years? So some of the important points which I want to tell you is that, no, first of all, no, this globe gradually decreasing in the interest rate depends on the growth and inflation paradox, no, will play a big role. As I told you, that as and when the RBI will start reducing the interest rate, that will give you push to the economy. Again, another point is very important point. There are lot many four state big election coming, and more than important current in the next year, that is 24. In 24, the general election coming. However, we know who is going to win it. But yes, these are some of the factors which will also dominate market about what is going to happen in next 1 year. Also, again, how the US economy and the Europe economy is panning out, because Euros and US and Europe economy, you know that there was an basically fear that they will go into recession. Now, still the US has not gone to a recession. Europe already gone. Now, how they are going to recover? And if they are going to recover strongly, and if the Fed is going to start reducing the interest rate, that will give a big push of money towards emerging market also. And if money is coming to emerging market, yes, India is one of the country which will do very well. So yes, that point also you have to keep in mind. So guys, these are the few points which I wanted to talk to you, know how the current Indian market is scenario is, and what I feel about the outlook. So as I told you, it looks like, no, Nifty may reach 21,000 in next 1 year. Possible chances are there, and the current market scenario also looks very good, and we are not in that exuberant situation where you have to just think and go and sell the stock. No, just wait, let the earning can catch up. Now the new season is starting, so we are going to come to know how the season will be there. Earning season from July month we are going to start, correct? So guys, now please write in the comment box, no, what you are invested in. No, are you investing currently in the value or growth stocks? And what do you think about the market? I am always reviewing your comment, so I'll always check it. And guys, another thing is, please subscribe to my channel. Do like this video if you like this video, because this type of videos I normally come up with to make you understand about the market. So do subscribe and like the video, and I'll see you soon in the next video. So see you and bye.